My friends, I have returned. Just wanted to jump in here real quick. This isn't going to be quite as long of a weekly outlook video as what I always like to try to put out on Sundays. I'm going to try to keep it as short as possible because I know it's kind of late. Real quick before we get started, if you've been following me and wondering where I've been about the past couple of weeks or so, I had some big time eye surgery done, and so even the lights now are still bothering me a little bit on my computer. So I'm not going to dive into too much. Basically, wanted to cover some of the stuff that I've been talking about on Twitter quite a bit lately. Which, if you haven't done so already, please follow me there. That's the easiest way to keep up with everything that I think is going on. It's the easiest way to ask me questions. You guys know the deal. This channel is not about financial advice. It's all about education. I want you to make great decisions for yourself and your portfolio because at the end of the day, I'm just some dude on the internet. You are the one that is stuck with your portfolio. So I want you to make awesome decisions for that. So having said that, like I said, follow me on Twitter. Let's jump into the chart and see what we're looking at here. So I kind of first pulled up the chart here. Looking at it on right now, this is going to be on the hourly time frame. I really just kind of wanted to see what it was sort of looking like as far as volume, RSI goes, things of that nature. The RSI is pretty neutral, so once we're hanging around in this 50 range on the RSI, that's going to be pretty neutral. As you can see, we had that massive 160% run up, and then we've slowly just been pulling back off of it. If we look at that run from our low of about 1290, is that right? Yeah, it was like right at 1290. Come up here to our top of 34. You can see that we have broken through the 786, which we always talk about on AMC, how she likes that 786 retracement on the lower time frame. So the next touch would be the 885 right around 1449. I talked about how important I thought that level was. I think if we significantly break 1450 with volume, then we would be looking at least of a retouch of around that 1290 range, or at least a touch of the 1290 range, or potentially even lower lows. I've had many videos where I've gone over potential situations where AMC could go back to $10 based on volume by price, visible range. We'll talk about that in just a second. I don't think that's likely unless the market is trash. Once again, my friends, I always talk about the overall market is what matters. Yes, we are playing out kind of like a similar run up to what happened in June of the previous year, but the market's not acting like the previous run in June of last year. So, unless we get a good bounce here or there, or unless AMC really diverges away from SPY significantly, I think we'll get drugged down with the overall market. So for me, who's a believer in the play, that's just an opportunity to kind of average down and go from there. But so like I said, we've definitely broken through that 786 level, which is right around $16 range. So I'd be looking to recover that. If we go out here to the daily, you'll see why this. So the daily RSI is starting to get towards the oversold territory. Once again, 50 is neutral. So right now we're about 38. So as you can see here recently, when we've gotten, into some of these ranges back in July, back in August, October, we have had some significant bounces. So I would be looking for a bounce here. Once again, if the overall market improves, once we got pushed all the way down here, it got us oversold as 18. Holy cow. But like I said, I'll be keeping an eye on the RSI. Plenty of room to run as far as that goes. But the reason this kind of 1450 level is going to be so important, I've got it pegged right at 1452. You can see how many big reactions we've had in these ranges before. So we have 1 touch, 2 touch, 3 touch, 4 touch, 5, 6, 7, 8, 9, 10, almost 11 touches. So this 1450 range is very important. Before the pre-June run up, that was the big time resistance. Once you get past big time resistance, then hopefully it needs to act as big time support. So if we break through here, like I said, it might be quickly, but that's when I would anticipate a test of the lower ranges. Our top trend line I've been talking about, hold on, let me get rid of these EMAs. I've been talking about since the all-time high, how important it is because it hit, got rejected obviously at the all-time high. It's where we got rejected in September. It's where we got rejected in October. It's where we passed through in November, retouched. Once again, if you followed my channel, you know this is where I thought we might be potentially seeing the next markup because we had a nice retouch and then the push up, but of course the volume didn't come with it. Then we came down. Then we got rejected multiple times. It was a rejection point here. So, like I said, this trend line is very important to me to get on the northern side of it and acted as support on the way down. Okay. So overall, that's what I'm going to be kind of looking at the main chart. Of course, we want to start recovering some of these EMAs right now. The 20 days at 1763, 1882 on the 50, 2150 on the 100, and oh man, this is where the eye problem comes in, 2405 on the 200. So getting on top of these EMAs would also be important for bullish scenarios. Okay, so if we do come down here, we want to see a significant rejection of this 1450 area on an increasing volume. Those of you guys that were following me on Twitter know I was also talking about this as a potential Elliott wave scenario of wave one up, wave 2 down. Usually the wave 2 retraces to either the 3.82 or the 618, and usually your wave 2 is also your harshest sell-off. So that's why I was really looking for that 618 to hold. What number was that? I think it was like 21-ish range. No, 18. So like that 1850 range, and you can see it tried to act as support and even get back over it, but unfortunately that failed. So a wave 3 is not impossible at this point in time, but it would be severely muted at this point in time as far as our upside targets. If you go from the bottom to the top to assuming that 14, your most common next move up is going to be the 1.618, or no, I'm sorry, on that. So from down here at the bottom, back up to the top, down to the bottom. So AMC before has definitely liked the 1.618s. So, and that would still actually take it up to the 70 range, and then you'd have a pullback on wave 4 and then pushing up to wave 5. But this, let me see here, is this set on? Yep, so it's still set on that. So this doesn't look great for a wave 3. Not saying it's impossible, but not my most likely scenario anymore, unfortunately. The next and last thing I want to pull up real quick, then I'll let you guys get out of here, is going to be the chart that I posted, kind of basically talking about my cycle theory on AMC. When it comes to cycles, once again, not everything is going to be one for one, but the pre-run up in June, we are definitely playing out that pattern right now, as you can see here, and the OBV, so the on-balance volume, is going to be what matches up with that. Okay, so we've got our peak 1, our peak 2, and our peak 3, as you can see. This one is bigger and it's taking longer over here on the right side. So there's the same peak 1, that same peak 2, that same peak 3, then we had the spring underneath it come up, and then from here, right here, from the $9, or which was right here where it really started breaking out at that $18 range, you can see the price is nothing but has a downtrend on it, while the OBV is still uptrending. Okay, so we've got a bullish divergence there. So that's overall going to be kind of what I'm looking for. It even lines up well with earnings. Which got, by the way, guys, earnings is going to be on May the 9th, which is Monday after hours close. So if this followed a similar pattern and kind of came up and then sort of bounced around down here all the way down towards earnings, that would mean, somewhere in the earnings ballpark of being around that $14 range, and then hopefully we'll get some good catalysts. I know everybody's already saying, well, Adam Aaron's already said that this one isn't going to be a good one, and I agree with that from a box office number standpoint. Okay, first quarter box office numbers aren't always going to be great. They've probably moved earnings to May 9th, so they make a tout the amazing numbers that Doctor Strange is going to be pulling down here this upcoming weekend. I've already got tickets with my son. We're super looking forward to it. We're going to be going on Thursday night. But I imagine between Batman and the numbers that Doctor Strange is going to be doing, I want to hear more about their cash positions. I want to hear more about businesses outside of just the movie theaters as far as their credit card is going, the popcorn sales, getting those into grocery stores, things of that nature. Just kind of building the overall brand is going to be what I'm looking for. So if the market does well and we bounce, we could definitely see AMC bouncing right along with it. The big areas of resistance that we are going to be wanting to get on, if we can get over 1850 again and kind of stay on the upside of that would send me pretty bullish again. Other than that, we're going to have to see what the overall market is going to do. I tweeted out on Friday that I said the overall market was going to run on Monday, and right now futures as I'm sitting here are plus 169 on the Dow, plus 22.5 on the S&P, plus 103.5 on NASDAQ. So right now futures are indicating that I'm right. Obviously we will see how that plays out, but I'll be watching cycles. We'll be watching, let me go back to the other chart. We'll be watching the VPVR. So this is where AMC has traded in these specific ranges. We're coming down here. Look at this, the 1450 range and this 1350 range. This is all solid volume where AMC has been traded solid before. So this should be a nice floor for us. If not, we break through into these volume gaps right in here in that 11. That would be, in my opinion, like I said, what could potentially take us all the way down to that $10 range. And then this $10 and $9 range is going to be a very solid floor. We would definitely at least trade around there for a little bit. So that's going to be everything that I've got for you guys today. Sorry, I've been absent. I should be back. I'll try to get out, right around 3 to 4 videos a week. But other than that, stay kind, okay? When AMC price action is doing well, everybody's just out there giving each other hugs and everything like that. And when AMC price action is not doing well, man, I see some just ridiculous comments and hating on people who are doing nothing other than trying to help you. So if someone's meaning well and they're trying to help, even if they're wrong at times, cut them some slack. I'm always grateful. I was shown a lot of grace throughout my life, and so I try to show it when at all possible. So if you see something you don't like, keep on scrolling. Other than that, keep the faith. As far as covered calls go and cash secured puts, I am going to start trading those again on AMC. I've got enough dry powder that if things do start to look really crazy, then I will be able to buy out of my covered call contracts. Once again, I always look for about 1% to 2% return on those bad boys of my overall portfolio. That's what I'm teaching, my son, and he's starting to do. I think this week is going to be, I've got some pretty safe numbers. I think this week that I'll be able to trade some covered calls in, but then I will definitely make sure all that is canceled out, obviously by earnings on Monday and everything along those lines. So just starting to do that again. I know I said I wasn't going to do it while AMC was sitting at 100% utilization, but we're just kind of treading water right now, so I don't like money just sitting on the sidelines. So I added more GME, I added more Mullen last week, I added more HYMC. AMC was the only one I didn't add more of. And then BBIG. So that's going to be my plan. Please go back. Once again, follow me on Twitter. You'll be able to see exactly like what levels I would be purchasing some of those stocks. But for right now, I'll go through and type out a plan here in just a little bit. But for the most part, plan on kind of just chilling other than selling covered calls this week. We'll see what happens with the overall market. Once again, I said the market's going to run on Monday. I think that it probably will. I think we'll at least see a relief bounce from what happened on Friday. And I love how strong AMC held up. Even in an ugly market, we were only down. What were we down? We weren't down a lot. I was like, wow, that's really solid. Yeah, we were only down 2% when everything else was getting hammered. Amazon was down like 14, 15%, stuff like that. So this is the kind of stuff that we want to see. A lot of small and mid caps have already been beaten down a ton. So if the mega caps get beaten down and money rotates back into the small and mid caps and everything like that, we could see some real nice runs here. But other than that, my friends, do your thing. Stay safe. Be kind. I'll see you soon. I'm glad to be back. Hope you're glad to see me. I'm certainly glad to see you. Y'all have a good one.